Hope you are all doing great. Welcome to the second of 8 online events, which are in-depth panel discussion about the Cbvc global report sectors. I'm Nicola Reinbold, the Ecosystem and Incubation Manager of Cbvc and CV Labs. Before we start with the panel, I would like to talk or to introduce you quickly to us and the report. Cbvc is an early stage venture capital investor with a focus on startups which build on the blockchain technology. Based in the heart of the Crypto Valley, the company invests in all stages of crypto and blockchain developments, from incubation to growth stage. In addition to venture capital investments, it has its own incubation and ecosystem business under the brand of CV Labs, consisting of co-working spaces, advisory, and events. Blockchain technology has the potential to significantly impact many industries, and Cbvc believes that the next third wave of large tech companies will be driven by catalyst technologies like blockchain, alongside AI, machine learning, automation, and Internet of Things. In the past, we did our Cbvc Top 50 report, which is a periodical report on market valuation developments from Crypto Valley. The report highlights the diverse ecosystem in blockchain and cryptocurrency, consisting of startups, corporates, and governments. The Cbvc Global Report, created by Cbvc in collaboration with PwC and distributed by Cointelegraph, shows technology trends and of top global blockchain organizations across the globe. And we focused on this report on 8 different sectors: blockchain in art, brokers and crypto banks, crypto exchanges, custody providers, market makers, platform and protocols, token issuance companies, and venture capitals in blockchain. The global report is rather a soft report. It's a landscape of all these companies. That's why we have this in-depth panel, like today, brokers and crypto bank. And now I would like to hand over to our moderator, Benjamin. Please take over.
Hey, everyone, and welcome to the discussion. My name is BJ Pyrus, and I'm one of Cointelegraph's reporters, and I'll be your moderator for the show today. Joining us for the discussion, we have Stefan P. Schwitter, Head of Investments at Cbvc Bank, Matthias Imbach, co-founder of Sygnum Bank and CEO of Sygnum Singapore, Dave Chapman, Executive Director at BC Group, the entity in charge of Asian Institutional Digital Asset Platform, OSL, and Mauro Castellini, CEO at Bitcoin Suisse Liechtenstein. Welcome, everybody. Thanks so much for coming on the show today. It's really awesome to have you guys here.
Thanks. Pleasure to be here.
Pleasure.
So let's jump right in. Matthias, let's start with you. As the industry is so new, how would you define brokers and banks' involvement in the crypto and blockchain industry? Like, maybe just say what they do, and because we're kind of in between here on two different worlds, and it's changing so much. So maybe just give us a kind of an overview of things.
Yes, I mean, you mentioned it yourself. We're in between two worlds almost, right? And you can start by maybe using the picture that future has heritage, and a future of future finance, of an industry or a marketplace where people have more direct access to ownership and value, have much more the masters of how they want to deal with their whatever they own, and also have a user experience which is much more efficient as we have it in today's world. But there's also the reality of today. There's a heritage of excellence in banking. There's a heritage of regulatory frameworks. There's a heritage of investor protection. And what crypto banks do, this is my view, is helping to bridge these two worlds. And that ultimately will also help to drive the next wave of adoption of moving towards such a state of future finance I think everyone on this call here actually believes in and wants to drive towards. That is kind of that role of, on the one hand, being fully regulated, bringing bank-grade trust to the industry, because that's ultimately what banks are selling, trust on the one hand side, and then secondly, moving towards leveraging DLT to make processes but also user experiences much more efficient. And brokers equally there, of course, Mauro can I think be much more specific than I, have an equally important role by bridging that gap from fiat to crypto, for example.
Excellent. Stefan, did you want to weigh in at all?
Yeah, absolutely. I mean, what Matthias draws a picture, I mean, very much holds the same for us as a licensed bank. And I think what distinguishes a broker from a fully fledged crypto bank is really the breadth of the services, right? Going back to the heritage of banks, banks in the past and now crypto banks in today's world, we strive to be sort of the one-stop shop for clients, interested in digital assets. So not just trading, not just exchange, but tokenization services, lending, custody, investment products. So to me, being a fully licensed crypto bank is really about covering a wide range of services and being a one-stop shop for interested clients.
Interesting. Dave, what are your thoughts?
Yeah, I mean, I think historically, crypto banks and crypto brokers haven't really existed in this sector. They were now obviously seeing fully fledged crypto banks enter, like Signum and like Cbvc. Unfortunately, to have both Stefan and Matthias on the call with us today. And obviously, we're starting to see crypto prime brokers starting to emerge, offering the types of services that a traditional prime broker would, albeit in the digital asset sector. But I think also the definition of what we call, a crypto broker or a crypto bank is starting to become quite blurred. And we're starting to see that become blurred because we're starting to see, traditional banks and traditional brokers actually starting to consider and entering into the digital asset space. And one of the things that's accelerating that is that the regulation is certainly starting to accelerate the emergence of new entrants, but also facilitating, as I say, your traditional bank and traditional brokers entering the space. And so that's a very interesting journey that we've been on that has really started to emerge, especially in the last 2 to 3 years.
Mauro, what are your thoughts?
Yeah, definitely. I see it exactly the same like the guys before me. But what I really like to add is the crypto banks and the crypto brokers, they bring in trust and regulatory security. So it's, if I am a Swiss financial intermediary and I would like to act directly with some US or Asian crypto exchange, that's dangerous from a lot of perspectives. And therefore, if I go to a regulated broker who knows what he does from a regulated perspective, that's where I get the trust. That's why I go to a Bitcoin Swiss, to a SEBA, to a Signum, or to OSL, because I could do it by myself, but I go to them because I know they do it the right way, and I get the best price prime brokerage offering. So I get what I'm asking for the best price available in the market.
Excellent. So moving on to the next question. So myself as a trader, I kind of relate to this question as well. The mainstream world uses brokers and as a way to facilitate trades on behalf of like retail and stuff like that. In crypto, we don't generally use brokers. We mostly interact directly with exchanges. So why do you think brokers are necessary if people can just go on exchanges and buy crypto directly? Is this kind of something that's changing, that's going to be eventually like the traditional world? Dave, do you want to start with that?
Yeah, sure, BJ, thanks. I mean, a couple of things to take in consideration is also that this sector has been largely dominated by retail up until now. And it's one of the things that has had to mature over time with regulation, with the services being offered. If I talk specifically around prime brokerage, services of whom position themselves to facilitate and coordinate, much more extensive, complex trading and custodial services that really such investors desire. For example, through our prime brokerage at OSL, we provide large block execution services, electronic and systematic execution services over multiple venues, access to OTC options, swaps, lending and borrowing services, multi-venue execution, as I mentioned, and audited and insured custody. And this goes, well above and beyond your traditional single venue exchange platform capabilities. And I think, I started this answer by saying that this is a maturity of this space. And when it was largely dominated by retail, you probably could survive or rely simply on an exchange service. But as we do see, professional accredited investors, licensed financial intermediaries, they're demanding the same types of services that they would expect from a traditional prime brokerage. And so for them, this route of execution and this type of service is actually quite familiar for them.
Interesting. Mauro, do you want to add in on that?
Yeah, I couldn't agree more on the side of Dave. It's exactly the point there. It's as the area is getting bigger, it's getting more professional. It's the professional intermediaries are essential. That because also from counterparty risk, if you speak of banks, they always ask you about counterparty risk, how they can interact with you, what's their risk if they work with you, and you can explain them. Look, if you work with exchanges, you need to have access to 15 exchanges. On every exchange, 1 million at risk. So 15 million at risk in your own book, or you trade through us, 1 million at risk, or even less if he gets a loan from us or a credit line. So that's really where you bring in the professionalism and the easier access for big players to this new world who everyone believes in. I think so.
Stefan, did you want to add anything?
Absolutely. I mean, we do have a lot of conversations with a number of clients coming in, and we have exactly that conversation. And I think that where the industry is right now in terms of maturity, there's a space for tech savvy, maybe retail people going directly to exchanges, and there's a space for maybe more regulated entities, more professional investors going through regulated brokers. And at the same time, there's a space for whole service banks like ours, for clients like regulated pension funds or intermediaries. So I think it's a matter of maturity of the market, maturity of and the risk appetite of investors. But I think currently the three avenues can coexist with each other.
Yeah, that makes a lot of sense, and it's a lot of it's at the end of the day, it's a lot of parties interacting together, regardless of how it plays out. Matthias, did you have any thoughts on that?
Well, just adding a simple. I mean, I do agree with what has been said, but just to add a simple proof point, right? Just think about people managing third-party money, people managing other people's money. For them, it's much more important than for a retail investor just investing his or her own money and put his or her own money at risk, on an unregulated exchange versus a person or a group of persons or a company which is regulated, has fiduciary responsibilities, putting other people's at risk as a profession. So that obviously then drives all the things that has been discussed: counterparty risk management, making sure that the counterparties are audited, that they're following all the anti-money laundering, etc. rules. So that's, I think, what is the driver here. And as mentioned before, for me, what is important also for the community to hopefully understand that as a takeaway, it's good for the industry because it drives the next wave of adoption, right? Because we need that. It's good for everyone, particularly for the retail investors that have invested earlier, right? We are just helping by bringing on board the next tier of investors.
Interesting. So kind of moving on to, banks and what my question is, what is the importance for banks to have a focus on crypto? And how is that different than the situation is currently? Dave, do you want to start off?
Certainly, but I mean, rather than start with me, maybe we start with either Stefan or Matthias, given that they're the crypto banks. I certainly have and want to opine, but it's only fair to let those gentlemen go first, I think.
All right, Stefan, let's go with you.
Absolutely. Well, we see ourselves as a dedicated digital asset bank, as building bridges from what people expect from a traditional bank in terms of safety, comfort, service levels, professionalism, and all the good stuff that people have grown to depend on from traditional banking, right? But we're doing it in a new space. We're doing it in the digital asset space, in the crypto space. So to me, working for a crypto bank is really building bridges from the old world into the new world, the digital space. And by the same token, I don't think you can do a little bit of digital assets, just sort of on the side. I think if you want to, this topic is so deep and evolving at such a rapid rate that you'd have to be, to be a professional leader in this space, you have to be committed to the space. You can't do 80% traditional banking and a little bit of digital on the side.
Yeah, that makes sense. And it's definitely probably changed a lot in the last even 2 to 3 years, I would imagine. Right? So, Matthias, you wanna weigh in on that?
To be a professional.
Yeah, it's about focus. It's about providing an all-in-one account approach. We at Signum call it digital assets. So it's actually which encompasses 3 different types of digital assets. On the one hand side, it's cryptos that I think everyone watching here today already knows very well. Then it's stable coins, in our case, our own digital Swiss franc token, and asset tokens, which kind of is that next phase, upcoming phase of leveraging the technology to make the process of transferring value, for example, a company stock, etc., much more efficiently as in today's world. I think a crypto bank is important to bring about that change and also link it to today's world by making it seem as if you're just logging into your traditional bank account from a user experience standpoint, right? You have your fiat positions and next to it your Bitcoin and your digital Swiss franc token in your depot and asset management products that focus on digital assets. So a convenient approach. And I think that's what we're here for. And whether there's a crypto bank at play when you see the team being able to speak to a banker and trying to explain what's happening, and equally to a crypto foundation, and both parties sort of feel they get it, right? So then you're talking to a crypto bank, in my view. Yeah.
Excellent. That makes a lot of sense. Mauro, did you want to weigh in on that?
Exactly, it's the same, but for me it's very important that the traditional banks, some of the big ones are already working this 20% in the digital world. The question is always there: should they do it by themselves, or should they work together with players like Bitcoin Swiss, OSL, SEBA, Signum? Because then they can still focus on the traditional banking, but as soon as the race starts and it's getting bigger and bigger, they do not lose. Because from my perspective, most of the banks I know when I speak with, they have all their digital asset department and everyone is speaking about it, but most of them are not doing anything, but they are looking at it from behind the scene. And if they see it starts going on, they have already in their pockets, they know exactly with which players they will work together, they would work together. And that's a really interesting phase that we see at the moment. We speak with many professional financial intermediaries, and all of them are saying, look, guys, as soon as we reach that level or that point, we are in and we do it. So we need to know now how it will work in half a year, in a year, or latest in 2 years. So it's really a phase in between where definitely crypto banks are essential and will also be essential in the future. But for me, also very essential as a service provider for traditional banks who would not like to lose the race.
Definitely. Yeah. Go ahead. Sorry,
BJ, and I'd agree with that. I think rather than talk about crypto-specific banks, probably what the viewers or listeners might find interesting is that right now the number of banks that either provide services to crypto participants is quite limited, and similarly, the number of banks that provide direct access to crypto to its own customers is almost non-existent. Fortunately, we're graced with both SEBA and Signum banks. I think historically speaking, the banking world has shied away from this space. Worthy mentions as far as crypto or bank servicing crypto participants would also probably include Silvergate and Signature New York, who service the US and their global counterparts such as ourselves. I think from a traditional banking sense, banks have typically shied away from crypto because it has been historically seen as being high risk, being unregulated, and it's also a space where they didn't really want to enter. Like it, love it, or loathe it, this is an asset class that's now acknowledged. It's not going away. There is regulatory clarity emerging, and we're seeing traditional financial household brands that are entering this space. To emphasize that it's reported now that JP Morgan is providing transaction banking services to two of the world's largest regulated venues in North America. A mere 3 or 4 years ago, you had the head of that organization that called Bitcoin a fraud, and that's okay. It's completely fine for people to change their stance, and I think that that's what we'll see continuing to happen. We're seeing traditional financial household brands who had historically had very negative stances on Bitcoin and the wider digital asset sector. And it's funny, some of these banks, they have different approaches when it comes to digital assets. Some of them are publicly saying that they're entering this space, but the majority of them are actually still saying that their external publicly facing message is that this is not a space that we're going to enter, and we don't have any plans. I can assure you that that's actually not the case, and a lot of these banks are actually scrambling behind the scenes to understand how to best participate, and I think that's very exciting. And it's only a matter of time before we see more traditional household brands adopt this space. I don't think whether or not they're as innovative as some of the representatives that we have on this call we'll yet to see. But I think that that's a change that's radically happening, and it's happening very fast.
Yeah, that definitely makes sense. It kind of goes along with my next question, and it was kind of something Matthias touched on. Will these crypto native banks or crypto first banks replace current mainstream ones and kind of adopt more mainstream services along the way? Or will mainstream banks start to adopt crypto activities and get more of a crypto focus going forward? Like how does that look? Like, essentially my question is, will crypto native or crypto first banks phase out traditional banks, or will those banks adapt? Matthias, do you want to add in? Because I know you mentioned kind of an all-in-one solution, so it kind of goes along with your comment on that.
I think both can happen. Is likely to happen. To Mauro's point before, and also Dave mentioned it, there's right now lots of banks, lots of traditional banks, some publicly positioning in, others not, ramping up their digital asset efforts, trying to preparing to provide crypto custody, brokerage, etc. And one thing that I at least start to realize is that decision of whether they want to do it themselves or with partners such as everyone here participating is a very complex question. And many sometimes take a year plus to figure out, right? And lots of consultant spends, etc., until they figure out one thing, which is, in my view, and would love to hear everyone's thoughts here, always coming up. People completely underestimate what it means to think it through end to end. And people focus too much on the technical implementation of, let's say, a custody platform and somehow integrating it into the core banking system. But I would say this is probably 20% of the challenge. If as a traditional bank, you want to get into this space, you need to really live and breathe it. And you need to understand what it means from a compliance perspective, risk, internal control, onboarding and transaction monitoring. How do you educate salespeople that they actually, know how to sell this? I think that's 80% of the problem. And oftentimes banks then realize that, it could make sense to work with specialists, because if you want to get into this new space, you need to live and breathe it and do it 100%. So that's for the part. Are traditional banks getting into crypto? Absolutely. And they're right now figuring out how to best do it. And I think over the next 2 years, we'll see lots of news and actually stuff going live. And then whether crypto banks will or can replace traditional banks in the midterm, for some, I think so, because I don't think that in 10 years, we'll still have around 250 or so banks in Switzerland, and is in any other, as an example, and is any other industry, there will be those that do not adjust to the new normal, to the new technical infrastructure. Some of them may not make it, and others may change fast enough. So I think both is possible.
Interesting. Mauro, did you want to weigh in on that as well?
Yeah, it's very difficult to say in which area or direction we will go. It's definitely a lot of traditional banks will die, but that's not because of crypto. That's because their business models will not work anymore in the future. So because they are not digital enough, they are not open for the right clients anymore. Big banks will be cheaper than them, and therefore they will run out of business, because that's how it will go on, because a lot of things change in the banking industry worldwide and not only in Switzerland. What I really would like to look at is how will it really change. For example, if you look at concepts or projects like Libra, will they change the way how payments will be done in the future when it will happen? So if that will happen, a lot of banks will have big problems, and banks who are already open for crypto or digital businesses, they will definitely be able to change faster, adapt faster, and find a new niche faster. So I think it's more of, will banks be agile enough to change if it's needed or not? And the banks who are not able or not willing to change, they will lose the race.
Interesting. Stefan, did you want to weigh in as well?
Yeah, absolutely. I think there's a number of things from our perspective. One, absolutely, many of the larger international banks are looking at the space. They're sniffing around it. They know it's here to stay. It's a new business area, and they're interested. But at the same time, they understand that you can't do it lukewarm. You can't do it half-assed, because it's very complex, and there's a lot of pitfalls if you do it sort of on the side as a side business. So absolutely, a lot of larger guys are going to move big time into the space within the next few years. I think the model that we're seeing now, and probably for the next 18 to 24 months, is really the model of cooperation, right? Where established larger banks work with specialists like us, like my colleagues, and sort of outsource this knowledge for the time being, and sort of have an option to do it themselves at some point in time. And I mean, point in case, it's public knowledge that one of our shareholders is Bank Julius Baer, a very traditional global private bank. And then, my guess is their investor in Seba to outsource the topic to us, and to also have an optionality on the growth of digital assets, right? And lastly, I mean, how is banking going to be 5-10 years from now? I think it's very fluid, and it's sort of accepted knowledge that a lot of banks are going to go out of business. I don't know if that's the case, but I'm fairly sure that banking 5 to 10 years from now is going to look entirely different than what banking looked like traditionally, right?
Right. And personally, I've seen some people in the crypto space say like, oh, crypto instead of banks, blah, blah, blah. Mm-hmm. And I've definitely seen they kind of need each other to function. Like ideally, both can help each other from what I've seen. Dave, did you have anything to add?
Unfortunately, I've got nothing really to challenge what's already been stated or already. The question was, will these banks and brokers replace current mainstream ones, or will the current mainstream brokers and banks adapt to include crypto and blockchain into their business models? And unsurprisingly, I think it's a combination of both. Banks and brokers are super cognizant of being replaced by newer entrants, and they've witnessed this in other asset classes. So they know that they must, adopt at times, whether they like it or not. And we'll see some new entrants carve out, significant market share, through innovation. We'll see others that will probably be snatched up through acquisitions by some means by way of adopting. An interesting data point, similar to the interactions I'm sure Stefan is having, the dialogue, interactions, and deals we're securing with traditional financial incumbents relying on our SaaS solutions, our software as a service solutions, as a means to expedite their time to market is also one option. And I think that's also very telling.
Sure. So next question is, I think something that everybody has wondered at one point or another. Stefan, let's start with you. When will a mainstream bank provide its customers direct access to crypto? So whether it's like a regular retail person holding or buying or anything such as that?
Surprisingly, and I mean, you know, what I find fascinating in this space is that I think all of us, surprisingly enough, are in favor of more regulation. But typically, you're totally against it because it's a pain in the neck, right? Too much regulation. But I think this one of the largest hurdle for adoption, if not the largest hurdle, is really for institutional clients is regulatory uncertainty. And almost on a weekly basis, we see national, international regulators giving the green light to adoption. You know, what I found extremely fascinating was 3 weeks ago, the US banking regulator gave the green light for traditional commercial banks in the US to do crypto storage. I mean, it's huge. So we're looking at Wells Fargo, you know, all of a sudden being able to, you know, to do custody on Bitcoin. So I think as this moves along, it's going to give credibility to the space. And along with this comes really the development that, you know, a traditional bank will offer more and more services in this space.
Yeah, that definitely makes sense. Mauro, what do you think?
Exactly. It's the more clear regulation is, the more the banks are open to jump in. And for example, last week, the regulation MiCA, markets in crypto assets for Europe, leaked. And that's very interesting because that's a MiFID regulation for crypto that will be discussed in the EU Commission in the following weeks. Could be in place early as 2023. Possibly will be later, but it shows that regulators are looking heavily at crypto assets and how to treat them, and to mention like, okay, it's not a security, what is it? What is a utility token? And this regulation, if it's in place, it will open up the crypto business for nearly every bank, and these banks, most of them will definitely look for providers like we are here in the panel, because they cannot do it by themselves, but there will be big banks who allow it. And for me, the question is, mainstream banks, is Vontobel Bank from Switzerland a mainstream bank? Because they are allowing since many years an investment in a certificate in Bitcoin they have. So it's, some banks even do it. If not, you can invest directly in Bitcoin, you can invest in a tracker certificate, but some mainstream banks allow it already.
Mm-hmm, for sure. Matthias?
Yeah, nothing much to add. I think, yes, further regulatory clarity, which is really coming in on a almost weekly, monthly basis, will drive this. So I have no hesitation to, I'm sure that this will come. Secondly, banks, there are banks that are already doing it, and some have announced it. Vontobel was mentioned. In Switzerland, we also have a Swissquote, but we also have even a Swiss cantonal bank, which publicly stated that they will get into crypto, which is also quite an interesting phenomenon. So it's coming. I also know in Singapore, there's various banks seriously looking into it. I think it's a matter of 6, 12 plus months until we'll have a nice cohort of banks that will start offering it.
Gotcha. And Dave, I'm gonna change the question just slightly, unless you had something to add directly.
Well, I was going to try and add some controversy for the panel. I mean, we started to talk about dates and timings and so on. I know we talked about some banks, and I'll have to apologize for not being so well acquainted with some of the Swiss-based banks that is already offering access to crypto. From my perspective, I was going to try and be a little bit controversial by saying that purely from a personal perspective, I believe that we will see a large mainstream bank offer direct access to buy and sell crypto such as Bitcoin and Ethereum to its customers before the end of this year. So probably not as controversy to say that, given some of the already responses. I think it's also worth noting that we've already seen a number of mainstream banks offer digital asset custody. So we've seen Nomura, State Street, Standard Chartered enter this space. But custody is a very challenging business to make revenues from on its own. And I think it makes a lot of sense to see some of these innovative banks actually expand and mature their custody offerings to also include execution and prime services. That's where the money is to be made. And I think that's going to be a natural progression for a lot of these banks that have started with the the core building block, which ultimately is custody, and they'll move on from there.
So going on your comment on custody there, again, both kind of help each other, but there is an argument to be said that crypto is created so that like you could custody your own assets and you can control your own assets. What is the big pull to custodying? Like, isn't that kind of antithetical to like the crypto space?
Sure, I'll take the first stab. I mean, I can certainly appreciate that it doesn't particularly resonate with Bitcoin's libertarian roots. However, if we want crypto to quickly become, to turn into a multi-trillion-dollar asset class, and to do so very quickly, unfortunately, we are going to require some custodian options that provide the same type of assurances that a traditional custodian does provide today. And I can appreciate that some people think that this is necessarily bad to rely on financial institutions, and in some cases, it's those that have failed their very customers. Hopefully, and potentially, it's the transparent nature of digital assets that can, in this case, help keep traditional finance honest. One of the other things I'll say with respect to the custodian services in this space is that managing the safekeeping of crypto is hard, and it's really hard for an individual. It's really hard for an individual that's not acquainted with technology, and for a large, licensed financial intermediary that potentially holds billions of dollars of AUM, they actually do want the assurance of having someone that has providing an audited, insured service. And lo and behold, everyone wants someone to blame when something goes wrong. And when they're relying on a custodian that is insured, is audited, has a very large balance sheet, that definitely gives them the comfort of telling someone in some organization to remember these 12 words, and if you lose them, well, all their assets are gone. It is a real sort of mix between where we're at technically and what traditional finance is demanding, and this is what the services, at least for some of us today, are trying our best to provide.
Definitely. Mara, what do you think?
Yeah, I see it the same, and from my perspective, it's for the, I would say, for the classical traditional retail guy that has volumes up to 100K or something like that. It's like not your key, not your crypto for sure, but if you can't handle it, don't do it. So go to a bank you can trust, how we are doing it nowadays. But for the big ones, they even need it sometimes. So their audit company tells them, look, guys, we know you can store it by yourself. You have this nano ledger S in your vault, but that's not good with us. We will never sign an audit report if you do not have them stored with a regulated custodian, because sometimes by regulation they need it, and otherwise the audit company tells them, look, guys, we are not able to sign an annual statement if we do not have the assets at a custodian. And therefore, it's very essential that we have regulated custodians out there, even if some people can do it by themselves.
Mm-hmm. Matthias?
Yeah, for retail investors, it's convenience, and for institutional investors, it's governance. It's a requirement. So that's the summary for me.
And Stefan, did you have anything? I can switch. I have a little bit of a twist on the question, if you have further comments on the previous one.
No, just a comment that that's the beauty of the space, right? You have very different stakeholders in this new digital asset space, and some of them need very little handholding, right? They're self-directed, they're traders, they're retail investors, whatever. But large asset holders, institutional grade asset holders, typically need institutional grade custody. So I have sympathy for the view that might be a bit of a contradiction to the original concept, but it's a practical necessity.
For sure. And so going on that a little bit, wouldn't it change? First of all, it's like, what are your projections? Do you think the majority of people, once crypto goes fully mainstream, will opt for other entities to custody their crypto? Or do you think there's always going to be like a 50-50 split, or like a divide of people that hold it themselves or have someone hold it? And if the majority of people do opt for custody solutions, wouldn't that change crypto into more of a 9-to-5, Monday to Friday opportunity, versus now it's like, it's awesome because you can access your funds and do things whenever you want. So it's kind of, again, it's kind of antithetical to what it was at the start, which was 24/7 availability of your own funds. So what are your thoughts on that? You can start, Stefan.
Yeah, sure. So 2 questions on the first one. The cost of solution really is entirely a function of the nature of the asset holder, right? And whether it's going to be 50-50 or 80-20, to me, depends on who's going to be more active in the crypto space 6 or 12 or 18 months from now. Is it going to be retail investors, or is it going to be institutional asset holders? If it's the latter, then we'll see more institutional custody needs, right? And to your second question, I'm of the opinion that, you know, the genie's out of the bottle, right? We're not going to go back to 9 to 5. And I would venture a guess and say that actually traditional markets will have to adopt to what we see on digital markets, and traditional markets will have to be tradable 24/7, maybe in a tokenized fashion, or maybe the way they are now. But you can't turn the wheel of time and say we're going back to 9 to 5.
You are mute.
You're on mute.
Oh, sorry about that. That makes sense. Matthias, what do you think?
Yeah, I think there will be both. And the beauty is that the technology allows choice, right? Ultimately, we now have the choice. Do we want to have as close access to what we own as possible? We could even memorize the private key and then travel the world, and with an internet access could access it. That's the beauty of the technology. So we have that choice. So there will always be both. There will be people just managing their own wallets, particularly in the retail segment. But what is very clear, if the next wave of adoption on the institutional side comes, then of course in relative terms, the assets, crypto assets custodized via regulated banks, brokers will become much bigger, in my view, very, very fast. So that's that. And on the 24/7, I think we already now 24/7 on crypto, right? Because you mentioned, will it then lead back to 9 to 5 model when, for example, crypto brokers and crypto banks are leveraging or adding crypto to the portfolio? That's already happening, right? I mean, at all institutions here at present, you can trade 24/7 on the platform. I agree that with Stefan's point that it's probably the other way around, that traditional markets will have to adapt to where we are now, which is 24/7.
For sure. Dave, what do you think?
There's different types of custody for different type of participants. I do think that the non-custodial roots of Bitcoin and digital assets is awesome. It's just not appropriate for a large amount of people, unfortunately. I've given away so much Bitcoin to someone on a phone app, and I'll ask them 6 months later if they still have it, and they don't. It's just not appropriate for them right now. And so, I agree with what's already been stated. There's different solutions for different type of participants. With respect to this business ever being 9 to 5, absolutely not. We operate 24 hours a day, 7 days a week. Our vault operations teams continually and constantly top up our operational hot wallets throughout the night, throughout the day. And if one of our counterparts is to withdraw, $20 million worth of Bitcoin, they send it directly from our cold wallets. And this is something that our counterparts would not accept if we were to say we're on a lunch break right now. Unfortunately, it's the demands of this business, but it's definitely not going to ever deviate from where it is today, and it's definitely truly 24/7.
Interesting. Mauro, did you have anything to add, or do you want to go on to the next one?
Only one thing, that's where, again, the crypto players like we are coming. The traditional banks would need to change or need to work together with players like we are, that their clients who will use their crypto offering have access to their assets 24/7. So if crypto will definitely not go back to 9 to 5, and it's 24/7, and the crypto banks, crypto brokers are already working 24/7. So that will not change, but the traditional banks need to change or need to work with us.
Gotcha. So I have a few audience questions here, one of which is for the 3 banking guys here. So is it okay to use Bitcoin Suisse, SIBA, or Signum as a private investor who is a non-Swiss citizen, for example, Asian, what's the requirement to use those banks? Are there minimum amount of assets required, and is KYC required? So which three of you guys want to take that question? I'm okay with either of you. You were all mentioned. So
yeah, well, I can kick it off, and I think it's yes on all accounts. I think speaking for Seba, but I'd be surprised if it's entirely different for my colleagues. We're not necessarily a new animal. We're a regulated bank offering banking services. It's just that we specialize entirely on the digital asset space. But if anyone wants to be a client of us, it's the same things apply, the same criteria apply as if we were a traditional bank, right? And of course, that one of the main criteria is KYC, of course.
For sure. Matthias, what's going on over there?
Yes, I can talk for Signum that we are rooted in Switzerland and Singapore. These are our two core markets where we're also regulated, but we operate globally. We have certain focus areas, of course, but we can accept clients globally. The KYC, as Stefan has mentioned, we are a regulated bank, so KYC is paramount. So we have to follow the same rules as other banks. And on the minimum deposits, it is the case that in our case we focus on qualified private investors, so need to have a certain level of minimum wealth that you can kind of in your KYC showcase, so that we can onboard you as a client.
For sure. Mauro, what's going on with Bitcoin?
It's same with Bitcoin. With KYC is the most essential thing, that you do not get an account, a bank account or a brokerage account or whatsoever with a financial service provider if you do not show everything. So it's a full KYC process. If you come in with big volumes, also the money will be asked for. You need to deliver a lot of information. But definitely we are also open for clients worldwide. There are some restrictions, and for some regions there are some volumes they need to fulfill, but that's all possible to discuss in a case-by-case thing if a client is interesting and has big potential.
And Dave, I know this question didn't mention it, and it looks like BC Group and OSL are mainly institutional, but do you guys have anything retail, or is there anything that would pertain to this question?
No, not really. We solely focus on a non-retail demographic. So our typical counterparts consist of accredited investors, brokers, family offices, wealth managers, asset managers, commercial and investment banks.
Gotcha. So here's another question. I'm assuming you all are familiar with the Kraken news last week of Kraken becoming a bank, an official bank in the crypto space. What are all of your thoughts on that? Matthias, you want to kick it off?
It's amazing news, because it's the next step of another trusted node. I use that word trusted again. It's another proof point that adoption is coming, that there's more regulatory clarity, that we have more players, where it will also be easier for us, the regulated players, to interact with, to transfer money flows, also on the fiat side, even on the crypto side, because we haven't talked about it, but one of the key differences that I think also that sometimes is underestimated is that players that are focusing fully on digital assets and are regulated can actually also you can deposit crypto with banks such as Signum, Seba, for example, which is not just via fiat. You can get into the space, and I think with Kraken now being a bank is as mentioned another node which projects more trust and hopefully drives further adoption. So we are very excited. We were very excited to read the news.
Mauro, what do you think?
Yeah, I have nothing to add to that. It's amazing news. It's great. And it showed again that also the US regulators are open for crypto and would like to push it, and that they do not only publish like, yeah, you can do custodian, but do not do it in the end. No, it's really, we accept even new players in the market, and that's amazing.
For sure. Dave?
Congratulations to Jesse Powell and his team. It's a wonderful achievement, and congratulations to Wyoming, who facilitated that. It's interesting, today we saw the OCC in the US actually publish a letter clarifying that for national banks and federal savings associations have the authority to hold what they call reserves on behalf of customers, which can include certain stablecoins. So I think that's also quite innovative and a little bit of a surprise and great to read. I mean, specifically how quickly regulations are differing and moving around the world globally is very positive. We're seeing very innovative regulatory clarity emerge and solidify in Switzerland and in Hong Kong. And I think, you know, into next year with the introduction of central bank digital currencies, stablecoin initiatives such as Libra, it's really going to test just how quickly regulations can adopt. And we'll see a number of regions, arguably those that might be a little bit more nimble, actually capture market share through what I'd call innovative policy, sometimes in an effort to stimulate economic growth. You know, it's going to be super interesting, and frankly, it's a pretty damn exciting to see how this all plays out.
Stefan, what do you think?
Yeah, super exciting that a non-regulated entity morphs into a fully regulated bank. I think that's exciting news, and I think all of us here on the panel, we want the pie to grow. You know, that we want the ecosystem to grow. We want more counterparties, not fewer. So this is great news. It brings more legitimacy to the space, more mass, more adoption. So great news.
Perfect. One other interesting question I saw was crypto, like corporate companies and certain entities that are involved in crypto sometimes still have trouble opening accounts, and there's kind of some difficulties there still. What has to happen for that to improve and for crypto not to kind of be this red flag label for some companies that like regulations are like, well, you handle crypto, we need to watch you? Like, what has to happen for that to change? Dave, do you want to kick that off?
Sure. I'll keep my response brief, given that there's so many faucets to touch on. I'm sure my fellow panelists can touch on some others that I don't mention. But we are seeing finally global regulation emerge. Specifically, one example is the new travel rule from the Financial Action Task Force. This is a non-government member body that typically provides recommendations on the ability to minimize or eliminate money laundering and counter terrorist financing. And last year, they announced a travel rule which applies to crypto and to digital assets. And again, it goes a little bit against the libertarian roots of crypto transactions being anonymous, which largely they're not, as we all are aware of. But that is one of the pieces of global regulation that I think is going to, one, reduce that misconception that crypto is used for illicit activities, as much as the media love to report it as being so, and provides that clarity that we need and require to actually work together. And I think one of the interesting things that's going to happen as a result of that regulation coming into effect is looking at this landscape of existing participants and seeing just how many are actually ready for this regulation. For us, it's something we've been planning for and working towards, and I'm sure my peers today are also doing the same. But I'm certain, and I know for a fact, that there are a lot of people that aren't ready for this. And so we may see another changing of the guard. We may see new market leaders emerge. And again, frankly, it's an exciting space to be in for all of those reasons and others.
Definitely. Maura, what do you think?
Yeah, it's I would say a very difficult thing. It's because in my last job before becoming Swiss, I was the head of blockchain and payment service providers at Bank Frick, so at one of the most progressive banks in the blockchain space for crypto corporates. And that's exactly the point that I always go in. If a crypto company is able to explain their business like they would explain it to a 5-year-old, and the 5-year-old understands it, banks are open for it. And that was also the point that we at Bank Frick always has done: explain to your business case as simple as possible, answer a lot of questions, and therefore more and more banks are open for that. But as long as you are not able to explain your business very, very simple and very clear, there will not be way more banks. But there are more banks, but you need to be able to explain your business in a way how a 5-year-old should understand it, and then it will work out, and then you will get a bank account at more banks than you expect.
For sure. Stefan?
Yeah, just circling back to my initial statement that we're in a funny position that we're actually welcoming more regulation, whereas most people in the financial industry are against more regulation. So I think it's really it's new, it's exciting, but it's also scary for a lot of clients. And regulation, when I talk to clients, regulation is a huge enabler. So I think that's going to be a game changer. More and more countries fully regulating the space.
Matthias?
Yeah, I think maybe slightly provocatively, I would also address the let's say the DLT companies, the corporates that want a bank account. It goes both ways, right? I think there's also a lot of slightly higher level of professionalism needed on some parts. If you want to open a bank account, it's all about, as Mauro said, banks need to follow the rules, and using crypto as an excuse why you may not get an account sometimes maybe is a bit too short-sighted, right? Oftentimes, whether crypto or not, some of these companies would never get a bank account because the business model is not clear, ultimate beneficial ownership structure is not clear, etc. Highly complex corporate structures, which actually has nothing to do with crypto. But then, as soon as crypto is involved, it's then easy to say, well, I have crypto involved, and hence I don't get a bank account. It's not that. So I agree with Mauro. If you're able to showcase that you follow the rules and that you can explain your business model, you will get a bank account. Yeah,
that definitely makes sense. We have time, I think, for one or two more questions. Mauro, let's start with you on this one. This again comes from the audience. How much hot wallet insurance do you have, and what happens if losses surpass the maximum coverage insured?
So Bitcoin has at the moment a 50 million bank guarantee out there, and if you have your assets or your fiat with Bitcoin Swiss and everything should happen to Bitcoin Swiss, all is safe. So all hot wallet or assets that you have with Bitcoin Swiss or are in fiat with Bitcoin Swiss are safe with Bitcoin Swiss with a bank guarantee with a Swiss cantonal bank. So it couldn't be more safe than we are at the moment.
Interesting. Matthias, let's go back to you.
Yeah, we're a Swiss bank, so the base level is that via EdiSwiss, right? There's a general. This applies to all the banks that your first 100K, whatever happens, are anyway safe. And then in our case, is such that why our custody solution or custody solution is eligible for insurance, right? That we have various insurance providers that provide that insurance, and then on an individual basis, if clients, particularly for larger volumes, want to have an insurance on their assets, then you can get it. So that's how we handle it.
Stefan?
Yeah, same regulatory rules that Matthias mentioned apply to us, and I think it's important for clients to understand that that's the beauty of a regulated entity, right? So you have the 100,000 banking guarantee on individual accounts, but also if you bring in, let's say, Bitcoin, and the bank goes under, it's not going to take the Bitcoin with it, right? So it's all segregated. So I think the regulator does a decent job here to put out a sign of trust, right?
Sure, for sure. And Dave, I know this answer is a little bit different for you, but I think it still might apply to institutions and stuff like that.
Oh, 100%. I mean, OSL provides 100% crime and specie insurance on our hot wallets, and that's also required by the regulator. An interesting thing to note with respect to the custodying of digital assets is, as I'm sure with other platforms, every coin or token that's deposited into our own platform goes directly to cold. And what I suspect to happen in the future, at least in some regions, is that we will find some regulators won't even allow hot wallets, and that payments will have to be sent all directly from cold. And there's a number of ways that you can do that. You can batch them up and whatnot. And we have that capability already today. I do think in some jurisdictions, given the continual failures of having wallets connected to the internet, i.e. hot wallets, I do feel that there will be some regions that will not allow hot wallets, and you will be required to operate solely from cold. or wallets that are not connected to the internet.
For sure. So we have about 2 minutes left. And I know we're short on time, so if you guys could be as concise as possible. But I know the audience would probably kill me if I didn't ask this as well. DeFi, decentralized finance, it's the big fad right now. Is that going to mean the end for banks, brokers, and centralized exchanges? Mauro, let's start with you.
No, for sure not. As we mentioned with the custodianship, for me, DeFi is the next big thing for sure, and it will change banking a lot. But I would still rely on a trusted entrance to the DeFi world, and therefore banks and crypto brokers will definitely stay in business.
Stefan?
Yeah, I think DeFi is a super exciting proof of concept for removing the middleman, right? So just for that, it's a huge success. Most applications so far have really focused on borrowing and lending, but overall, I think it's going to add to the ecosystem. It's not going to fully replace incumbent banks, though.
Dave?
I love the fact that DeFi is accelerating the maturity and capabilities of smart contracts. Is it heated right now? I think it is. Is it as much as there are some very interesting products coming out of DeFi right now? Is sushi, hot dog, uni, and all the other great, amazing DeFi products coming out right now, are they about to replace crypto brokers or crypto banks? Unfortunately, not this decade, and probably not the next.
Matthias?
Exciting times. It will take a few years until it's more mature, but I'm convinced that actually the right combination of CeFi and DeFi will then be the killer app. So that's what we're working towards.
Excellent. I want to thank you all so much for being here. You've all been fantastic. Thank you so much, audience, for joining in. Be sure to be on the lookout for future panels. As Nicola said in the beginning, this is panel number 2 of 8 for the Cbvc and PwC report. The next one is coming up, and it will be on exchanges. So we'll have another panel with talking about exchanges. So be sure to be on the lookout for that and tune in for that. But thanks so much, everyone, for listening in and joining on, and we'll see you around.